I'd like to very much thank Howard for his words and sort of insights from his perspective of the challenges which we face. I find that he said much of which I wish to say, but with much greater eloquence. Can I ask, how many of you picked up your CPD certificates when you came into the room this afternoon? Excellent. I was tempted to say that we wouldn't give them out until Stephen had run a quiz at the end of the afternoon. But we decided on balance to give them out early, and I fear you're about to earn them now. Some people, as Churchill put it, regard private enterprise as a predatory tiger to be shot. Others look upon it as a cow they can milk. And as he put it, not enough people see it as a healthy horse pulling a sturdy wagon. You might choose to agree with where Churchill came out. Unfortunately, many people in the international political and regulatory community don't agree with him. That is why you have interwoven three strands of thought: that which regards financial services business as a tiger, that which regards it as a cow, and that which regards it as a healthy horse. They're all interwoven together, and that does have an impact on how international regulation works. And I'm going to endeavour to explore some of those elements this afternoon. It would, of course, be nice to pretend that we're free to decide by ourselves how to set our laws and regulations to sort of honour the view of the world of commerce which Churchill espoused. As you all know, however, and as Howard has made abundantly clear, it's not that easy because we are interconnected as an IFC. I thought could start off by briefly illustrating the global nature of our IFC. So there's a few slides just showing the origins of different types of business. While it's concentrated in Europe, or in the UK to be more precise, a few of our insurance companies are local, and their business is generally very international. Then if we turn to our closed-ended investment funds, they are anything but local, but with the sector as a whole being slightly more global in its fund gathering than the insurance sector. There is, of course, a concentration in Europe, but you'll see that while Guernsey is significant, Guernsey is actually the source of origin for only 11% of our funds. So as a domestic market in funds, we are relatively small. Turning to the open-ended investment sector, again, it's a similar picture, notably global, with Europe as a whole comprising less than a quarter of our total business. What about fiduciaries then? Well, we have many Guernsey-owned fiduciary businesses, but the origin of the business they do is truly diverse, covering every continent except Antarctica. Perhaps we can suggest Antarctica to Jersey Finance as offering opportunities for its fishing boats well away from the Guernsey coastline. We've got bank deposits here. Banking is slightly less global in nature. The significant portion of Guernsey deposits here in part reflects the contribution and value of fiduciary deposits to the banking sector. Those deposits have risen, of course, because of the value of the global fiduciary business. As I mentioned a couple of slides ago, we still have a significant number of local trustee and fiduciary. Has my microphone gone off? No? Okay. Fiduciaries as such. This chart certainly shows that's the case, but it also shows that even the ownership in what's our most domestic homegrown sector is very, very international. In summary, you can see that regardless of the financial sector which you look at, we are, as a financial centre, very much international and interconnected. What does this mean? Well, it means that for us, the international debate as to whether to set up regulation to shoot the tiger, to milk the cow, or to groom the horse is pretty critical for all of us, far more so than for a country with predominantly local financial services business. I think it's fair to say that global development suffered in the years between the First and Second World War, the interwar years, and in the post-war era in some places. India, for example, springs to mind, because of high levels of protectionism. The World Trade Organization, or GATT as it was originally called, was set up to fight protectionism by creating global trading frameworks with universally accepted rules covering important things such as intellectual property. Whilst some of you will undoubtedly not be that keen on some aspects of them, the same international regulatory rules to which Guernsey subscribes fulfill the same function as the WTO rules for trade in many respects. They serve to give our counterparts confidence that it's safe to trade financial instruments, services and products produced in Guernsey. Thus, we may lament the vastly increased complexity of some of the international rules devised since 2008. The fact that there are such international rules is pretty essential for Guernsey, as, were they not to exist, it would be far, far easier for other countries to shut us out of their markets than it is at present. We are, as a small island economy based on financial services, dependent on other countries which continue to grant us access to their markets. Therefore, to some extent, we have to, like it or not, dance to the international tune. Now, Howard gave you a brief rundown of international regulators earlier. I just thought it would be perhaps helpful, because we always talk about these things, just to say a few words about what on earth they are. You've got the Basel Committee on Banking Supervision here. That, strangely enough, does global banking regulation, and pretty much anybody, any country which is remotely serious about banking regulation has to do exactly what the Basel Committee tells it to do, otherwise their banks will just be regarded as non-equivalent, or even worse, highly reputable banks will not maintain themselves in a country which is not following the Basel rules to a decent degree. Then there's the International Association of Insurance Supervisors, or IAIS. Strange enough, they do insurance regulation. Then there's the slightly more opaquely named International Organization of Securities Commissions, which does markets regulation, broadly speaking, and looking at the investment firm sector and so forth. They're the main sectoral regulators. Then you've got FATF. FATF is slightly different because it's what I describe as a vertical regulator, because it does financial crime for everybody. Each of these sectoral regulators, they have a committee which looks at financial crime, but they're basically trying to work out how to do what FATF wants. So in terms of financial crime supervision, what FATF wants is pretty much what everybody else has to comply with. And then finally, last, but I hope not least, there is the group of international financial centre supervisors, where Guernsey is, dare I say it, something of a leading light. We have, over the past 2.5 years, developed the Trustee and Company Service Provider standards, which we have persuaded all members of GIFIX, which covers most of to adopt. Philip will say more about it in his presentation later on today. So, if you've got all those standard-setting bodies, strangely enough, they spend their time producing standards. We have to be bound by them for all the reasons I've mentioned. Thus, we do pay a lot of care and attention when we take exercises inspired by the international standard setters, such as the financial crime-inspired national risk assessment, which we aim to undertake next year to ensure that we can meet the requirements of the FATF's 2012 standards. I've got two bits of good news to impart on standards and standard setters. Talking to the Basel Committee a couple of months ago, they have recognized that they've maybe gone a little bit far with some aspects of Basel III in terms of there's a balance between risk sensitivity and simplicity. And they think they may have erred just a little bit too much towards risk sensitivity, and thus they are actually seriously intent upon simplification at present to try to make the Basel standards more digestible for most mainstream banks rather than tailored towards a few global giant banks which have a huge amount of investment activity. That is healthy. IAIS has been asked by the Financial Stability Board, the overarching regulator for almost everything, to develop global insurance capital standards for the first time. Some of you may regard that as a negative and unnecessary, but the facts are that the FSB, with the power of the G20 behind it, normally gets its own way on these things. And as IAIS, we are endeavouring to embark on that. But we are doing it in the spirit that we do not want to create a new global Solvency II. I think those who have experienced Solvency II as regulators are, how shall I put it, cautious about it, because it requires an awful lot of very hard work and it is mind-blowingly complicated and so forth. Rather, we want to have a sensible standard globally which facilitates people being able to buy insurance at sensible rates. We do not want an overly complex, overly risk-adverse standard which would lead to people being priced out of insurance, people who would benefit from insurance. So from both the Basel Committee and IAIS, there is a recognition that regulation becomes quite destructive beyond a certain point, and there is a desire to simplify and to proceed sensibly to make sure that you, the firms, and we as the national regulators are not overwhelmed by what they come up with going forwards. My first job after university was with BP. I can remember the group finance director telling us that the costs of financial distress, of borrowing too much, hit long before the accounts or cash flows indicated they should apply, because the market's ability to detect the direction of travel and to react adversely in terms of pricing our debt and equity. In the same way, I'd suggest the market, in this case, reputable people deciding where to do their international financial services business, would react adversely to us failing to meet financial services standards long before we were ever rated non-compliant by our assessors in terms of the outcomes which we achieve. Many of the firms which we have talked to over the last year about coming to the bailiwick and doing business here tell us they want to come here because of the confidence in the collective high standards which the states and you, industry, and we as the regulator have. And at this juncture, I'd very much like to thank all of you and your colleagues who helped us with the recent Moneyval inspection, where you have provided a lot of evidence to the Moneyval inspectors of how we were collectively compliant with the FATF 2003 standards. Those are the old standards. Fiona Crocker will talk more about Moneyval and financial crime later on in our series of presentations. But for me, I saw you being asked to do things at short notice, and I saw you bending over backwards to help our financial crime team do things, and then I saw you being grilled very aggressively in some cases by the Moneyval inspectors, and I saw you telling them the world as it is in Guernsey, and I think that was very, very helpful. We don't know the results of Moneyval inspection yet, but it was certainly the level of cooperation which we as the Commission received from you as industry allowed us collectively as the bailiwick to put our front foot forwards. And I think that can only be good as these hurdles which we have to get over for financial crime become ever higher and higher. So thank you very much. Thus far, I've made the case, at least I hope I've made the case, that as an IFC on international standards, we don't have that much choice about whether or not to comply, and that our counterparts will notice whether we comply. Given this reality, at the Commission, we find it helpful to understand what on earth those standards are and to influence those standards where we can. And as Howard said earlier in his speech, that can at times be quite challenging, as I'm sure indeed you find trying to understand them from time to time quite challenging. If you've got these sort of the main international bodies, I think I've mentioned all of them, except for the IMF, which, like the FSB, is one of these sort of great umbrella bodies which has huge reserve powers. There are very few people who are going to go and tell Christine Lagarde that she is wrong when she decides that something should change, and very few people want to go up against the who inhabit the IMF's buildings in Washington. So they're another one we engage with. They're not a direct regulator, though they assess us sometimes. But what are we trying to do in our engagement? Sorry, slide is not working properly. No, somebody appears to have played with my slide presentation since it went up. So I will just point. We are seeking to achieve equivalence. We are doing that with things like AIFMD. We are trying to follow a policy there when you industry and you the states decide that it's appropriate to achieve equivalence, to make sure that we can continue to trade with key markets such as the European Union. We're also trying to influence policy. In general, we try to put forward the view that one should only try to milk the cow rather than seeking to shoot the tiger. We try to moderate excessive zeal amongst some of our international colleagues because we don't actually think it's helpful to treat either cows or horses as tigers. We're also about challenging and changing perceptions. Making comments at meetings can be actually considered helpful. And if we as Guernsey turn up to meetings and we make comments which are considered helpful, we change the unfortunate perceptions which sadly exist in some jurisdictions as to our acceptability. When they see that not many of my colleagues, at least, look like the four horsemen of the apocalypse, they tend to treat Guernsey a little bit better than perhaps some of them might have been inclined to do before. Then there's the pragmatic bit. There's understanding requirements. This is about talking to people who wrote the policies to understand what's their purpose and to exchange ideas on implementation, because it's very hard trying to work out actually what's the essence which the international community wants done if one is merely starting with a dry bit of text. You don't understand the nuances which have gone into that text and what one was actually meant to take away from it. Fighting financial crime is also very important for us. I was very pleased that some of my colleagues have got plaudits from the Securities and Exchange Commission this year for their help in resolving some very serious American regulatory cases. We should be doing that just because it's the right thing to do, but it's also very helpful for us as Guernsey because it means that we're treated as a cooperative, helpful jurisdiction by other countries. Then, of course, there is promoting proportionality. You might call this in some ways promoting Churchill's vision of grooming the healthy horse in international circles, rather than pandering some rather environmentally unfriendly tendencies to shoot tigers. We also think fundamentally that if you're not sitting at the table, you're in danger of both being kicked and trodden on. We do work very closely with Jersey and the Isle of Man to make sure that Crown Dependency's perspectives are represented effectively. In all that we do in this sphere, we're seeking to promote confidence in the bailiwick. I'm not going to dwell hugely on this slide because I think Howard covered all these bodies in some depth. I'd just say that the European Central Bank is very interesting. This year they have taken on, or this month they've taken on supervision of all the banks in the Eurozone, all the significant banks, the top 130. They've also got oversight rights over all the other banks. That is a huge step change in regulation. It takes immense amounts of power away from the national central banks in all the Eurozone nations, and it brings together an organization where they're going to have 15, 16, 17 different languages to work with. I always find it quite amusing that the only language which one is allowed to use in the European Central Bank is English. Even French is banned as a language there. That did come in helpful when we were trying to draft the rules to how it should work a couple of years ago. So I think they could be a success. I agree with Howard that this business, that there's no effective European level backstop for bankrupt banks is a problem, but nevertheless, one shouldn't underestimate the ECB. It is a very powerful body indeed, and it's got a lot of very, very bright people working there now. These underneath blue bodies here, they're the European supervisory authorities, and we try to work constructively with them. I've been with John Harris to see the European Banking Authority this year. I and my colleagues have gone and seen ESMA several times, and we tend to talk to EIOPA, the insurance authority, from time to time. Then if we turn to the UK, we work very closely with the states, talking to the Treasury to understand what regulatory policy initiatives they are thinking about doing, to explain to them where we're coming from, and they explain to us where they're coming from. So hopefully there are far fewer nasty surprises than there otherwise would be. And then, of course, there is the Bank of England, which is the home regulator for an awful lot of our larger financial services businesses, with ourselves being the host, and its counterpart, the Financial Conduct Authority, which takes an awful lot of interest in things like fintech. We, within the Bank of England, liaise with the PRA and the Resolution Authority. I trust that sort of by now you're thinking that's an awful lot of bodies to liaise with. You're right, it is, which is why we do try to use our time with a great deal of discretion and to share the burdens with the other Crown dependencies where we can and where there is a good alignment of interest between ourselves. But if you think that is, just in terms of the international structures, the European structures, moderately complex, there is then, of course, just the plain substance of the stuff. And if we look at the range of things which the European Union is up to, it's quite impressive in some strange sense. It would be difficult to provide you with a single legible slide which set out the full range of measures which the European Union has in the works to change financial service regulation. Some people, I'm not going to take a show of hands here, will praise Commissioner Barnier because of the skill with which he and his staff managed to grip the EU's legislative machinery and churn out a huge range of new laws which apply across the EU, including, of course, in the UK. We now have Commissioner Lord Hill, who is in charge of the financial services portfolio, and the early signs are that he may take it in a more growth-friendly direction. But one shouldn't exaggerate his freedom of movement, given the commitments and the legislation to which the European authorities are already committed. That said, to be fair to the EU, there do appear to be some encouraging movements. Juncker, President of the European Commission, writing in his mission letter to Timmermans, who is the first Vice President for better regulation and a lot of other things besides, said that Timmerman, who, by the way, has to now sign off all new European Commission initiatives, should respect the principles of subsidiarity, proportionality, and better regulation, because they'll be at the core of the work of the new Commission. Juncker asks that when he acts, he will always look for the most efficient and least burdensome approach, and that beyond the areas where it is efficient to take action at European community level, that action should be left to the member states, where they are more legitimate and better equipped to give effective policy responses at either the national, regional, or local level. That's actually quite encouraging language when you think that the European Commission is the body which has the power to initiate legislation. Nobody else does for the European Union. And if Juncker is issuing orders in those terms to his commissioners, and if his commissioners abide by those orders, we may see the new Commission pursuing a more growth-friendly agenda than perhaps the Commission did over the last 5 years. I'm not going to say a great deal on the initiatives which Howard's already covered, but I will point out that the EU is now doing things on PRIPS, or packaged retail investment products, asking for more in key information documents and so forth. Howard's utterly right that the FCA is still in advance of the EU in terms of how it is approaching consumer protection. But in terms of thinking about your businesses, it's worth noting that consumer protection is becoming far more of an EU-level issue in financial services, and one might anticipate that they will demand some form of equivalence from us at some point if we want to do lots of business with them. On third country passporting, no great news to report here. The European Securities and Markets Authority is intending to publish in summer next year their proposal as to whether they'll give third countries such as Guernsey passporting rights. That doesn't suddenly mean we're going to get passporting rights in summer next year. Far from it. That's an initial proposal as to how it might work, and then we'll see how things work after that, and then what that means in terms of national private placement regimes and so forth. Howard's touched on the fourth AML directive, so I'm not going to say anything more on that. We are, however, doing an awful lot of work on MiFID II and on MiFIR, because the market access agenda for Guernsey there is very important, and we need to be very mindful of what's happening there. So lots of liaising with ESMA is going on. There's just a couple of other ones which is worth noting they exist. There's one which is fairly recent, the new Capital Markets Union, which Juncker would like to have in effect by 2019. The details around this are quite sketchy at the moment, but it's almost certain that the European Long-Term Investment Fund will be part of that. That is going to be a long-term project for us to keep an eye on as we're active in many of the areas which it's likely that that Capital Markets Union may cover. Then there's UCITS 5. I just thought I'd mention this because it's an example of the EU imposing a pay regime on fund managers, such as already been imposed fairly globally on traders in banks, of restricting how much pay they can get in any one year, about deferred pay and so forth. It's interesting to observe the EU going down that route, and quite attractive or unattractive that may be to a number of more entrepreneurial fund managers currently located in London. As you all know, a lot of these European laws go quite a long way beyond the international standards, which we as Guernsey perceive as giving us our license to operate. Some of you may feel that not enough of these initiatives are focused on grooming the healthy horse, with some of them perhaps focused on treating the dairy cow in such a way that her productivity might drop. And I think a lot of European politicians are starting to worry about the impact of some of these initiatives on growth. That much of it's difficult and that much of it's complex, unfortunately, doesn't excuse us from needing to work out how to navigate these initiatives and to find the best path for our horses. At the Commission, we are committed to helping both industry and the states enhance their understanding so that we can collectively find the best route for our horses through what at times can appear, as I well know, rugged terrain and high passes. The international rules under which we operate continue to change, and they will continue to change. As the rules change, so we've got to adapt to maintain our position and the perception of us as a useful part of the global financial system. The changes bring both risks and opportunities. Our hope as the Commission is that the bailiwick can collectively manage the risks while its firms exploit the opportunities. A large part of the financial policy agenda affecting your business is not set by states' deputies, states' officials, or even the Commission, perish the thought. Guernsey does, however, have an ability to set its own policy agenda at the margins and to decide how best to implement the international standards, though that discretion is declining as the regulations on how one must implement become ever more microscopic. The European international policy agenda is likely to continue to raise issues for firms in the bailiwick. They, you that is, will need to continue to evolve, to continue to look to your business models, and to be prepared to take risks, to exploit potential new markets, and to secure historic markets. We, for our part, at the Commission, will endeavour to work with you as you do that, while engaging with the states to understand the emerging policy agenda. And as Howard says, finding solutions to all these problems is difficult, and we really do appreciate the efforts of you, those of you who give up your time to come and work, and I mean work, not sit, on our working groups as we work through things like the rewriting of the handbook, as we work through things like the revision of laws programme. These are very important things, and we think that we are much more powerful if we can work with you and with the states on how to find solutions to these problems. As a Commission, we remain committed to proportionate implementation of international standards, and we look forward to your continuing to help us with that task. Whilst it's true for the regulator, as I'm sure Simon may explain later on today, that shooting a tiger can be attractive or even exciting. We honestly, genuinely find it's much more relaxing to spend our time on grooming horses, or at least making sure that cows have very good pasture where they can be very productive. In our work to represent Guernsey as a highly international and interconnected financial centre, that is our approach. Thank you for sort of your indulgence of my canter through what is both a complex and important subject for the bailiwick. Sorry it's not a bundle of laughs, but the international regulatory agenda rarely is a bundle of laughs. I'll now be very happy to sit down and take questions with Lord Flight, so I will hand back to Stephen. Thank you.